Nelson started at the very worst possible time. He had $500,000 of debt at 23% interest, yet he beat Parkinson's law to put money in the policy so he could turn around, borrow against it at a lower interest rate, control that loan, pay off some of the snakes and dragons, do what he needed to do to produce cash flow. And Parkinson's law, for those of you that have forgotten or don't know, Parkinson's law is a luxury once enjoyed becomes a necessity, and our needs rise to meet our income. I'm just going to do a little sidebar here. I find it very interesting that Cody Sanchez and Alex Hormozy and all these guys are now talking about Parkinson's law. Are they stealing our stuff? Are you guys out there stealing our stuff? I mean, really? But Nelson's been talking about it for 30 years. Hello, and welcome back to the podcast. Thank you very much for being here. Okay, today, Tarisa and I are going to talk about just savings, using the policy as a savings account and putting all of our money there versus cash flow and why that may or may not be a good idea. But we're going to do something new that I told Tarisa we should do, and then I totally forgot about it. And so Tarisa was prepared and I was not. But we are going to start our podcast with a little fun fact, maybe a stupid thing we saw, whatever, just something fun to talk about that has nothing to do with IBC, but give you a little insight into our personalities a little more. So I'm going to let Tarisa go first since she was prepared.
Yeah, we're going to spice it up a little bit today. So here is a fun fact. Half of all bank robberies in the U.S. are done on a Friday. People are getting ready for the weekend. Little weekend spending.
Yeah. We need money on the weekend to buy drugs or I don't know. What are we doing? Having a party? What are we doing? We had an attempted bank robbery yesterday, which would have been a Tuesday.
Was it successful?
In little old Bismarck, North Dakota? Nope. And the dude had to get naked on the street. So the street cams. Yeah, so I'm watching on the Book of Faces, and the street cams he is naked as a jaybird and he is having to do his little twirl and everything was exposed because he said he had a bomb. So yeah, he did not have a bomb.
Was he by himself?
Yeah. I mean, it is Bismarck, North Dakota. It's not like we have high-end bank robbers here,
Clearly not. I'm like, that's so embarrassing on two fronts. Like, one, you weren't successful. And two, you had to show your rear end to your entire town.
His rear end was the least of it, Tarisa.
Oh, my goodness.
Front end was exposed as well. He didn't get to leave on his undies.
Like, what do you want to be when you grow up? A naked bank robber that's unsuccessful.
A bank robber. We have John and I are going through Nelson's book, and the next chapter in Nelson's book is Willie Sutton's Law. And he was a bank robber, And so John actually did a little research on the Willie Sutton. So I'm excited to hear the research and what comes out of that. So if you're listening to this, go over to Farming Without the Bank in a week or two. We'll be going over Willie Sutton's Law and finding out about the best bank robber there was.
That'll be a good podcast. I'm excited to listen to that.
Yeah. Okay. So my little fun fact that I looked up real quick because I wasn't prepared was that a library book, I found this kind of interesting. A library book was returned after 82 years. And the note in the book says, Grandma won't be able to pay for it anymore.
That's so cute.
I wonder if they go back. I wonder if the library goes back to the heirs like the nursing homes do. I'm sorry, but you don't get to screw over the library. So,
right.
You are the heirs. So you're going to have to either buy this book or pay the fines.
That's so great. Like that book has probably been there longer than most people have been working there.
They didn't even know it was missing. I do know. I think that Scott has told me that he's had to buy some books because he lost them or whatever when he was in high school. Because that was a big deal if you didn't return a library book. Now they probably just go buy another one.
Because you're letting the public down.
Yeah. I wonder if you can still even get fined. I don't know. I don't go to the library.
I do. You can.
Oh, okay.
And I would know this because I paid it. I hang on to them a little too long. So.
Oh, well. Okay. So today let's talk about, I have come across a couple of clients this week. I've heard of other people that are just using the policy as a savings account, which is great and fantastic, but definitely not Nelson's intent, because we don't need, it's a great place to store money if you need to store money. But in today's environment, is that a scarcity mindset? And I believe that to be a scarcity mindset, because we really shouldn't be in a position. Yes, we need to have some money in savings, but we shouldn't really be in a position where we have shut down and said, we can't produce anymore. We are locked to this income that is very much a scarcity thought process. This is how much money we make. We can't make any more. The cash value is liquid so that we can use it for cash flowing assets. And so we should be doing that to make more income. And then we don't have to worry about necessarily how we're going to buy groceries.
I think that's also a really good point too, because I just think that there's a fine line between, even in the IBC world, having this accumulation and then spend down mentality is kind of what it feels like, which is what everyone is typically taught to do in their retirement plans. It's like put as much in there as possible and then use it as little as possible so it lasts. And I think if you're not careful, you can apply that same sort of kind of hoarding scarcity mentality to your policy instead of putting it to work externally to bring you additional cash flow, like so that you can sustain, like build your cash flow in the future so that you can not have to just worry about a set number, a set number in your account.
Mm-hmm. We need to look at how the question should be, how much cash flow can I have coming in during retirement versus how much do I have to spend down?
Mm-hmm.
Right. And especially we're seeing this in the real estate world a lot right now, where real estate's not moving as much as it used to be. Realtors aren't making as much money as they used to. Real estate investors aren't making as much money because they can't flip and turn houses as quickly. And so they're saying, hey, I don't have the money for a policy. Or even the industry really that I'm working in farming is commodity prices are down, cattle prices are up, but commodity prices are down. And so everybody thinks that they're special in their own industry. Like, oh, nobody else is going through this. Everybody's going through it. Everybody is saying, hey, I don't have enough money to do X, Y, and Z. And the question needs to be, how can I have more money to do X, Y, and Z? And I've had the conversation a lot in the last week with people that Nelson started at the very worst possible time. He had $500,000 of debt at 23% interest, and yet he beat Parkinson's law to put money in the policy so he could turn around, borrow against it at a lower interest rate, control that loan, and pay off some of the snakes and dragons, do what he needed to do to produce cash flow. So what was he doing to produce cash flow? He was selling life insurance. He was a forester. He was doing things outside to produce more cash flow and then beating Parkinson's law once the cash flow came in. And so he wasn't in Parkinson's law. For those of you that have forgotten or don't know, Parkinson's law is a luxury for this conversation, a luxury once enjoyed becomes a necessity, and our needs rise to meet our income. And I find this, I'm just going to do a little sidebar here. I find it very interesting that Cody Sanchez and Alex Hormozy and all these guys are now talking about Parkinson's law. Are they stealing our stuff? Are you guys out there stealing our stuff? I mean, but Nelson's been talking about it for 30 years. So Parkinson's law is a big deal. So we have to figure out, how are we making more cash flow? Do we want all of that money sitting in cash value as a savings account? And then on the other side, we say, oh my God, I don't have any money to go do anything. I can't pay my bills, but I have my savings account. Can the savings account create cash flow?
Yes.
Can the so-called life insurance is not a savings account, okay? Like, don't misinterpret what I'm saying. It is cash value. Can that cash value be used to create cash flow?
Absolutely.
And then how do we do that?
There's so many different ways.
Right.
There's unlimited ways. It's infinite banking, right? So there's infinite amounts of ways to use your policy to produce cash flow. It depends on like what you're interested in. Like for me, I love real estate and like hard money loans. I think that's really interesting and a great way to be the bank for someone else that hasn't taken the time to capitalize anything.
Mm-hmm. Yep.
So I have a question for you, Mary Jo.
Are you going to help
business.
somebody start a business, or are you going to buy a business? What is needed that you can do? I mean, we were just talking today in our staff meeting that in our town, it has been absolute chaos because school started yesterday. The busing system changed. So now the little kids go to school earlier than the big kids because they can't find enough bus drivers. And don't even get me started on why we can't find enough bus drivers. And so now everybody's in an uproar. And I'm like, well, this would probably be a really good time to have Grandpa's taxi. And so Grandpa can start a little business that says, hey, I'm going to take your kids to school in the morning and I'm going to pick them up in the afternoon. And I'm only doing that for a handful of kids because that's all I can fit in my vehicle, right? And he gets to pick and choose which parents he works with and which kids he hauls around, because we all know that they're not all glorious to have on your bus. And so that is, if there's an opportunity, there's a need. I don't understand how some people can't see it. And some of that comes with that all comes with mindset. Some people are in such a position in their mind that they're like, I'm so down and out. My mind cannot even go to what these solutions or what these opportunities could be. Instead, we're so hyper-focused on being broke and being in debt that we think we need to pay that all off, but we also think it's supposed to be really hard.
That's a really good point. Well, and I think you do such a good job of like kind of reorienting people in their mindset about what's possible, because it is hard, I think, sometimes when you're so consumed by like the problem of something that it does take someone else to be like, hey, look, like you have so much opportunity in front of you and you have to choose to look at it that way. Right? It's like with every problem, there's an opportunity, regardless of whether or not it feels like it. Mm-hmm. There's always an opportunity, but you do have to make sure that your perspective is grounded in that sort of thinking, like, okay, well, what's the solution to this? How can I overcome this?
Or find the person that can help you go through that. Like I have a client that I helped this week that she said, Mary Jo, I need to get all of our debt paid off. I want to run it through the policy. I want to borrow against a policy, pay off the bank, and then I can move that debt over to me. She goes, but the only way that we are told we can and she's in this group of farmers that she pays to be in, that they're coaching one another. And she said, the group is telling me the only way that I can make more money is if I buy more land or if I farm more ground. I said, that's it? That's all they got? You paid for that? That's the best they've got. Nobody is saying, how can we increase the construction business? How can we buy and sell cattle to make more money? How can we change farming practices to make more money? Can we do some custom farming? What can we do? So instead, they're worried about goals and mission statements. which I think both of those things are completely pointless. Do I have goals in my head? I know where I want to go. I don't need to write it down on a piece of paper. I get up every day and say, this is what I need to get done to get to that destination. Right? I don't have a mission statement on a piece of paper that's hanging on a wall. My gosh, if you're going to hang something on a wall, hang on the wall. How can I? That becomes the question.
That's so good. I'm gonna do that. How can I? That's what I tell Daniel that sometimes. I'm like, we're asking the wrong question. It's like, how can we not like all the reasons why this isn't possible? It's like, yeah, you have to do some like offense defense, right? It's like, okay, you have to mitigate for risk. Sure.
Yeah.
You have to be smart about it. Sure. You have to be well researched before you, all of those things, right? But still the question should be, how can we make this possible? Right. And I think that so many things happen in ways that we don't think about. Like you're talking about your client. I had a meeting with some real estate investors and they were talking about that they just did this successful flip. They made like over 6 figures doing it. And they're like, we're considering paying off these rental properties. And I was like, you just made $100,000 and then you want to go sink it in something that is at a low interest rate and already is like...
And tie it up in equity?
Right. I'm like, so I asked him a question because in my head, I'm like, well, that's dumb. But of course you can't say that.
Right.
So I was like, I just asked him like, okay, so how much money will you make extra if you pay off this rental? And they're like, oh, well, it'll cash flow like an additional $1,000 a month. And I was like, okay, so it would take you 100 months to make what you just made in one flip. So I was like, well, what if you took that money and did another flip? Would you make more money than paying off the rental? And they're like, yeah. But I think sometimes we just get so used to being like, oh, I have to pay this off. And it's just like, you need to put your dollar in the most useful place. Like, where is it going to have the highest velocity? Where is it going to have the most momentum? Where can you put it so that it can circle back to you very quickly?
Right.
That should be how you're thinking about things, not how can I pay the bank back as fast as possible for like an extra $1,000 a month? It's like, well, if you're looking at $1,000 versus $100,000, which is more exciting to you?
Well, and maybe I have that $100,000 and I put 50 of it back into a flip and I put the other 50, I just leave that liquid in cash value. So if an opportunity arises, I have it. If something catastrophic happens, I have access to it. But we have to gauge, we don't want to be so leveraged that we end up like Nelson. We need to understand that the reason infinite banking exists is because he got caught with his pants down. We need to keep that in mind. I am not leveraging every single dollar. Now, we have colleagues that do. They are very aggressive with their dollars. That makes me lose sleep at night for them. Okay? I would not be that aggressive, but I surely wouldn't have these 3 to 5 years of savings in my cash value and say, I need to have 3 to 5 years of money in cash value that's liquid so that I can live if something catastrophic happens. I would have a year, maybe, and I would have a year not based on my spending at what I'm making today. Because if something catastrophic happens, y'all aren't going to Starbucks every day for your $9 coffee. I mean, unless you are absolutely clueless, then you're going to go do that. But you're going to say, whoa, I lost my job, or something, COVID happened, or something happened where we have a loss of income. We're going to adjust what our needs are according to how much money we have. Let's just say something crazy happens and it affects my business. Well, I would probably cut out some marketing. I would maybe have to reduce employees. I would, there are things that I could possibly sell that I've accumulated. There are things that you can do to say you need 3 to 5 years. Nelson said, our need for finance is greater than our need for death benefit because we only die once. Our need for liquid money to create cash flow is super important. So if I can have a year's worth of money liquid, then what could I do with the other 3 to 4 years that you're telling me that I need to have saved? Could I use that to create more cash flow? That then creates more cash flow, that then creates more cash flow? And when I explained that to my client, I said, if you buy cattle, and let's just not even use a cattle example. Let's just say that you start a business and you make 25%. Now you can use that 25% to put it back into your business to make another 25%. And then you use that 25% to make another 25%. You're compounding your business. It's no different than why doesn't Mary Jo pay quarterlies? Because I'm not giving the government my money every quarter that I could use to market my business that then could create more income for the year. That blew my accountant's mind.
Of course it did.
I mean, that was very telling to me when my accountant said, Mary Jo, you need to pay quarterlies. And I said, no, I'm not paying quarterlies because I can use that money to market, to sell more books, to produce more podcasts, to have more clips, to do whatever I need to market so that I can help more people. And the cycle continues. He had truly never even considered that.
That's so funny. You should always want the utility of $1 on your side for as long as possible. Don't be so quick to hand it over to someone else because it's your power to harness. We're so trained to just give it away to someone else, but we were trained that way for a reason because they understand the power of harnessing $1 for their purpose. So just start doing what people that are super successful are doing. Keep it on your side. If you have enough money to solve a problem, then you don't have a problem.
Right.
And I remember one time, I think I was having this conversation with one of my old mentors, and he was saying, because I was kind of in this predicament. I'm like, okay, well, I need to have a certain amount of savings, and I also want to make sure I can grow my business. And he was like, well, are you putting more faith in your savings or yourself? And I was like, ooh, that's a really good point. It's I am the person that did this. So I should be putting the faith in myself and invest in myself and invest in growing my business because that is going to just compound. Like you said, that's going to be more fruitful for me. And it was just a really good question. And I think sometimes we get so used to feeling comfortable and what's safe. And maybe that is $1 amount for you or a certain amount of savings, but you also are required to put that into motion because anything that's not in motion becomes stale.
And that was the one thing that I told my client. I said, you're focused on paying stuff off instead of being focused on what cash flow you can create with the skills you have. And you and I see that when we're meeting with clients. I am not giving clients advice if I can tell they're lazy. If you are the person that comes to me and says, oh, it's so tough. It's so hard to do what I'm doing. And we're barely getting by. And then we pay this off and something else comes up. And it's just constant. I'm not going to tell you to go out and create more cash flow. You're probably going to need some savings. You're going to need something. You're going to need that liquid money. We need to quit calling it savings. It's not savings in a policy. It's liquid cash. We're going to need the liquidity of that cash value because you're Eeyore, right? If you're Winnie the Pooh, everything's great because you just figure out how to do it. And we have clients that are not lazy people. 99.99% of my clients are not lazy people. I would say 100% of my clients are not lazy people. They are not going to say, oh gosh, I don't have any money. I can't go do that. No, they are going to say, oh, well, I can't pay that. I'm going to figure out how I'm going to pay it. I'm going to
how
go do
can I?
something. It's the how can I question.
And
And
because that's always grounded in a way towards where you want to go, regardless of whatever the obstacle or challenge may be, which just puts you in a power of control. It's like, I'm not going to be a victim in this situation. I'm going to figure it out and I'm going to find the solution.
And so if you're a business owner, this all kind of comes down to, and we need to close this out so we don't go on forever. But if you are a business owner and your business isn't doing well, the question is why and how can I do better? If I am a realtor and I am selling real estate and it is not going well, okay, even my own realtor, when all the prices changed, it had completely slowed down for her. And she's like, yeah, I just, Century 21 changed how she can target people and all that kind of stuff. And I said, well, great. So what else can you do to make money? How can you be the expert in our market? Can you do a podcast? Nobody in our market's doing a podcast. We have a colleague. He met a gentleman that when COVID hit or when a hurricane hit, people were just displaced. He made cookies, chocolate chip cookies, and he said, hey, come for cookies and just visit with people. There are now billion-dollar deals being done over chocolate chip cookies. Okay, people are flying in from all over the country to have cookies on Friday. Like, what can you do to give back to your community to help you more? I was not always successful. Oh, good grief, anything but. But I never sat and was like, oh, this is so hard. I can't sell life insurance. I was always looking at how can I do this? What can I do here? How can I reach those people? How can I? And so we're in this. Nelson didn't say, oh, sucks to be me. I have $500,000 of debt at 23% interest. Guess I'm going to have to fold her up. He didn't say that. Right? He said, how can I get more money through the policy? How can I beat Parkinson's law to build my banking system and control my own money? This mindset of, oh, I need all this money saved or liquid or whatever you want to call it, it's not creating cash flow. And not everybody is meant to be a business owner. Not everybody is meant to do real estate. Not everybody's meant to be an entrepreneur. But if you are not going to do something on your own, you are capped at your job. That is all you are making. I don't know what to tell you. Then you're going to end up being Eeyore, right? You're going to end up living on this amount of money and it's going to drain. And all of a sudden you're going to be like, oh, no, I don't have any money and I'm 80 and I don't know what to do now.
Yeah, it's also better to start asking these questions as early as possible.
And the wealthy have a different mindset. It's just different and you can change your mindset. The end of the day, your life insurance policy, you may want a little bit of liquidity in there, but you want your money to be moving. Money must flow like water. Nelson talks about that as well. Every problem we hear from our clients, the answer is in becoming your own banker. Money has to flow. You do not deposit money in the bank and they put it in an account and never touch it. The second that money hits the account, they are looking for people to lend it to so they can be turning money and making 10 to 1. And then you wonder why banks are on every corner, because money has to flow. But yet we think our money should not flow. I will have enough money, liquid, to make sure that I can get by for a shorter period of time. Maybe 6 months, a year might be a stretch even for me, because I am not a person that's going to lay in bed and sulk about something that happened. And if y'all don't know that already, where have you been? Okay. If somebody is going to try to shut me down, I am going to address that head on. And it is not going, unless I have a damn gag order, I am not stopping. Okay. The more you piss me off, the louder I get.
Oh, a gag order. That is too funny.
I just heard about one of those the other day. Somebody can't talk about something because of a gag order. I don't know that I could uphold it.
Depends on the subject, I think.
Yeah, it depends how much jail time it's going to require.
I think this was really good, even for me, just like having this conversation, because I do think it's really nice to just be around people who think like that, because it is an active choice, but you also have to be kind of aware of the company you're keeping and like what their mindset is to make sure that you don't fall back into like your old way of thinking of like, oh, I only have this much money, or I don't want to invest in this because what if? I remember one time Mary Jo and I were talking about an investment property and she was like, well, will you be homeless over it? And I was like, no. She was like, well, then why not do it? And I was like, oh my God, I'm going to start using this as like a filter of like, okay, am I going to be, because I'm super conservative. And so I'm like, am I going to be homeless over this? And I'm like, there's so many things I would do before I was homeless. Honestly,
Right.
There just are.
You would go get a job.
Oh yeah, I would do all of the things. Yeah. So I was like, So for anyone listening, if you kind of just need that permission or that like, okay, well, what's the worst that can happen? It's like, will you be homeless over it? No. Okay.
Try it.
Go put your money to work. Yeah.
Right? We just sold a townhouse and I barely am going to break even on this deal. Right? I may actually lose a couple grand. Whatever. Tried it. Didn't like it. Bad idea. Don't buy a one-stall garage townhouse. That's what I learned, right? But it was the cost of the education because I didn't talk to other people. Things just changed in the process. Like, not the end of the world. Should have sold it with the offer I had last time. Didn't think everything through like I should have because I wasn't talking to other people about it. And so you need to surround yourself, like you said, with those people. But by God, don't pay to be in a group of small thinkers. Like I told my client, I'm like, save your money. Call me every month. For crepe's sakes, it's free. You're a client. I'll talk you through it. Like it just is crazy to me. We're in these groups or we're at the water cooler, as Nelson said in Becoming Your Own Banker, and we're trying to get a bigger rate of return and we're not talking about cash flow. And then the people that are talking about cash flow as a smaller thinker at the moment, we're like, well, those people are just trying to get rich quick. No, actually not. They're just trying to figure out how to make money. And money is not a bad thing. And we'll have to maybe talk about that in a whole nother podcast. Because I got a video sent to me yesterday about how there was a Jewish book, and I got to look at the video more, but there was a Jewish book, and they talked about how the Jewish people, it was prestige to be wealthy. They were not looked down upon. But we are looking down upon wealthy people because we've had this shift in society, this thought process that wealthy is bad. Why? So, whole nother podcast. But anyway, okay. We got to end it so you guys can shut us off on your drive. Any final thoughts, Tarisa?
No, this was super fun. Thank you for having me again. And for anyone listening, I hope you have a fantastic rest of your day.
Okay. Well, she said it. Go to withoutthebank.com, email Mary Jo at withoutthebank or Tarisa at withoutthebank if you have questions. Get your book, read it, schedule an appointment with either one of us, and have a fantastic rest of your day.